Okay, so this next video lecture is still the continuation of our Module 7, and we are now in accounting for materials cost. So basically, we have three types of materials. We have raw materials, work in process or work in progress, and finished goods respectively. When we say raw materials, these are purchased or items which will go further processing, which will be incorporated into producing a product. So they are considered to be the basic materials, okay, and has like chemicals, flour, or lengths of wood. Raw materials can also be items which were actually manufactured by a supplier, such as components of parts which will be used in production for another type of good or inventory. That's for raw materials. When we say work in progress or process, this refers to the partially made products, meaning raw materials that have undergone production but not yet completed. And for finished goods, these are complete and ready for sale inventory. For accounting of materials goods or cost, usually we follow the process and the movement of this process between each stage. We will account for it using our T accounts. So in our T accounts, we will be recording transactions from the purchase of raw materials, work in process, finished goods, and ultimately until they were sold to the customers. As materials move into a department or category, our T account will be debited with the cost. And as the materials move out of the department or category, we will credit the corresponding cost for it. So we have here an illustration, okay, to explain further. For raw materials, for example, we have raw materials bought for 5 per unit. So we will debit it in the raw materials T account for 5,000. And then once they are issued to production, okay, in this case, it's 800 units. So we will credit it, okay, for 4,000. So times its unit cost. And then our ending inventory also for raw materials can be determined. Okay, in this case, it's 200,000. And then those items which were out from the raw materials and was placed in production, so we will debit it in our work in process. So along with the labor and overhead. Okay, and then once this process was completed, so the items of 700 units will be transferred to our finished goods. So we will debit again this transfer to finished goods and credit to work in process. Okay, and ultimately, when these items was sold, so we will credit our finished goods for the sold item. So in this case, it's 500 units. And we will also be determining the ending or closing inventories for each of these categories of inventory for raw materials, work in progress, and finished goods respectively. For materials requirement, making allowance for sales and product or material inventory changes. So meaning changes from beginning to ending balances. So raw materials are not necessarily the same that it will be used in production because there might be changes in raw materials inventory. So for example, it would be possible to use materials in a period without having to purchase any because we still have enough inventory from our beginning balances. So the adjustment of materials purchase will be using this formula. Actually, this formula was derived from our cost of goods sold formula. Okay, so to determine the raw materials purchased, this is equal to raw materials used plus closing or ending inventory minus beginning inventory. Okay, the company has to buy enough to cover usage and to provide also enough for the ending inventory, especially if there are requirements. But it gets to have a head start because there's already some beginning balances. So to determine in this case the units produced, so we will use this formula. This is again derived from the cost of goods sold formula. So units produced is equal to units sold plus ending inventory of finished goods minus beginning inventory of our finished goods. So that's how to determine it. Okay, for transactions for accounting materials, so we have here the different transactions. Okay, so first is the purchase of materials. So in purchasing of materials, the entity will be dealing with different transactions as well related to the purchases. So the first one is the trade discounts and quantity discounts. Normally, they are not recorded because this was granted upon the purchase. So cash discounts are reductions in the amount paid for the materials. And this is not treated as other income because they are availed of upon payment. But normally, the payment will be after or days after the purchase. Okay? And if we will account for the discounts, we will have to recognize income upon the purchase and not upon the sale. Okay? And when the amount of discount is significant or material, to avoid inconvenience, so normally the entity will use or will compute, or recompute the unit cost. So that's impractical. That's why in these cases, to avoid inconvenience on this part, so the entity can use allowance method. Okay? So that they will have one computation only of unit cost, irrespective of availing or not availing of the discounts. Okay, so to illustrate the allowance method, we have here an example. Materials are purchased for 200,000. We have here that the discount term. Okay, so this is when we say 210, meaning within 10 days, if the entity is able to pay within 10 days after the purchase, they will avail of 2% discount. But if the entity will pay beyond 10 days after the purchase discount, but within 30 days, they will pay the full amount. Meaning, in this case, they will not be availing of any discounts anymore. Okay, this is the meaning of 210 and 30 discount term. Sound financial management dictates that 4,000, so this is our discount, 2% of 200,000 should be availed of, meaning the entity should pay either on the 8th or 9th day after the purchase date. Okay, so the entry for our using the allowance method are the following. So upon the purchase, so we will debit materials for 196, meaning in this case, the entity will already assume that they will take or avail of the discounts. So that's why materials are debited net of discount. And for the discount, we will use allowance for purchase discount account. Okay, accounts payable for 200,000. When the entity paid within the discount period, meaning they were able to avail of the discount. So the entry will be to debit accounts payable, we will close 200,000. Cash is only 196. And we will also close the allowance for purchase discount account. But if the entity will pay after the discount period, meaning in this case, they will no longer be availing of the discount, so the entry will be to debit accounts payable, and we will use purchase discount lost. This is the amount of purchase that were not taken by the entity. Cash is for the full payment of 200,000 without the discount, and we will close allowance for purchase discount. In this case, the unavailed discount is considered to be a loss. Okay? So the allowance method has the advantage of avoiding recomputations for our unit cost because the discounts will be accounted for using their respective accounts. Aside from purchase discounts, the entity will also be encountering freight in or freight cost upon the purchase. So this is for purchases may be treated, or this freight in or freight cost can be treated either as an addition to our purchase cost or to factory overhead. Okay? For example, if the entity will treat the freight in as addition to the purchase cost, then specific freight charges may be directly added to the purchase cost. So we will use freight in account in this case to determine the applied amount to purchases. So to understand better, if in this case the freight in is added to the purchase cost of the materials, So the unit cost will be computed as follows. Okay, for example, freight cost of 600 is incurred for our 10,000 units. So the unit cost of this material is 0.55. However, since we will add the purchase cost, so instead of having 0.55 unit cost, we will have, okay, to add the freight cost. So invoice price of 5,500 plus our freight in. So the total purchase cost will be 6,100. We will divide this by the number of units purchased. Therefore, the unit cost is now 0.61 and not 0.55 because again, freight in or freight cost was added. Okay, so here, there is an addition of freight cost for 0.06 or that's 600 freight in divided by 10,000 units. So to account for this transaction, the entry will be to debit materials 6,100, credit to accounts payable 6,100. Okay, assume further that instead of using or basing our freight cost on the monetary value, the supplier based it on the relative weights, okay, of the item. So assume that purchases consist of 6,000 units of materials XYZ and 2,400 of materials ABC. So the unit cost of XYZ is 0.20 and ABC is 0.70. So their total weight is 300 and 200 pounds respectively. So again, we will allocate the freight cost based on their relative weights. So again, please take note our cost or freight cost here is still at 600. Okay. So to account or to compute for the unit cost for these two items using their relative weights, we have here the following computation. For materials XYZ, so we will use the relative weights. So 300 divide 500 pounds. 500 is the total weights for these two items. Okay? And then we will multiply it with our materials handling cost. So the freight or the allocated freight for XYZ is 360. So to determine the freight in per unit that will be added to the unit cost, we will simply use the allocated freight in and divide it with the total number of units purchased. Okay, so that's 6,000 for materials X, Y, and Z. Okay, so in this case, that's 360 divided by 6,000. That's 0.06. Okay, so this will be added to our unit cost. So in our illustration, unit cost for XYZ is 0.20. So plus 0.06, it's now 0.26. Okay, for our materials ABC. So materials ABC, on the other hand, so we will use the relative weight again. Okay, so using this formula, so 200 divided by the total weights of 500 times the material or freight cost of 600. So the allocated freight in is 240. Okay, and then the freight in per unit will be the same also. So this is 240 allocated freight in divided by, this is not 6,000, I mean, this is 2,400. Okay, so 240 divided by 2,400 units of ABC materials. So the freight in per unit is 0.10. So 0.10 plus the unit cost of 0.70. So the unit cost now for materials ABC is 0.80. Okay. So if a freight cost also may be charged to purchases at a predetermined rate. So you can use estimated purchases in terms of monetary value, weight, or volume. Okay, so freight costs are charged to our freight in, okay, and applied to the corresponding debit for our materials, for raw materials, work in process, and finished goods respectively. So any year-end balance is treated similar to our factory overhead variance and will be close to our cost of goods sold or income and summary expense, or income and expense summary, sorry. If the balance is significant, then we will prorate this difference to our cost of goods sold and to the materials, work in process, and finished goods respectively. If factory overhead will be treated as, if freight in, will be treated as factory overhead. So this treatment will require the inclusion of estimated freight in our predetermined factory overhead. We will just add it in our factory overhead rate. Okay? So freight in for supplies and for sales or administrative departments, this will also be charged to their corresponding expense accounts. Okay, another transaction for purchases is materials handling cost. Okay? So in this case, this is after the purchase actually. This is the second transaction for materials. Aside from purchasing, we will also deal with materials handling cost. This is at the time actually from the moment it was ordered, received, and storage of the items. Okay? So materials handling cost refers to those incurred incidental to the acquisition and storage of our materials. So basically, in this cost incurred, it will include purchasing department, receiving and inspection, accounting, and materials department respectively. So your materials handling cost will also be treated either as factory overhead or additional cost for our materials. If materials handling cost is treated as factory overhead, then it will be included in the computation of our overhead rate. And the actual figures will be charged to factory overhead control as well. If the entity chooses this materials handling cost to be as an additional to our cost of materials, then it will be charged to materials upon purchase at a predetermined rate. So costs incurred are charged to materials handling cost control, and the difference, if there is any, will be close to cost of goods sold. And if the difference is significant, we will allocate it between cost of goods sold, raw materials, work in process, and finished goods respectively. In charging materials handling cost to materials cost or purchases, the entity can use either single rate or departmental rates. If the entity uses one departmental rate only, so to determine the materials handling, we will use this formula. That is estimated materials handling cost divided by estimated materials purchases. However, if the entity will use departmental rate, meaning we will determine the rate for each department respectively, so we will have the following. For purchasing department, the rate per purchase is equal to estimated purchasing department cost divided by estimated number of or amount of purchases. For receiving department, rate per unit is equal to estimated receiving department cost divided by estimated number of units to be received. For materials department, rate per unit is equal to estimated materials department cost divided by estimated number of units to be purchased. And for accounting department, rate per transaction is equal to estimated applicable accounting department cost divided by estimated number of transaction cost. So to illustrate, we have here an example. Okay, so the budget of Manila Manufacturing Corporation for 2021, books of accounts and analysis sheets are shown. We have per budget and actual, respectively. Okay, so we have for monetary value of purchases, number of units, number of orders, departmental cost, and the total departmental costs. So if the entity is using one predetermined rate, so we will use the formula for it. Meaning, materials handling cost rate is equal to estimated departmental cost, so this is 270 per budget, divided by also the estimated purchases. So this is the per budget purchases also. So therefore, our materials handling rate is 5.4%. For the variance, so actual minus applied. Actual is 305, okay, based on the data. minus the applied. Applied is 5,500. This is the actual purchase times the predetermined materials handling cost rate of 5.4%. So that's 297. So the difference is 8,000. So to account for this, our entry is upon purchase. So we debit materials, actual purchases plus our materials handling cost, okay, of 297. This is applied. Okay, so that the materials is debited for a total of 5,797,000. Accounts payable is 5,500, and applied materials handling cost of 297 will be credited. Actual materials handling cost. So to account for it, we will debit materials handling cost 305, credit to a cash or accounts payable. To set up the variance, applied materials handling cost is 297, debit also to materials handling cost variance of 8,000, and credit to materials handling cost control or actual of 305,000. To close the variance, so we will close it to cost of goods sold. So this is using or debiting cost of goods sold of 8,000, crediting materials handling cost variance of 8,000. Okay, and for the departmental rate, for example, if the entity is using this, so we will use the formula. For purchasing department, so it's cost divided by number of orders. This is budgeted all. These are all budgeted or estimated. So 6,000 per order. Receiving an inspection, so budgeted cost divided by budgeted number of units to be purchased. So that's 2.8. Materials department, 500 cost divided by estimated number of units to be purchased. So that's 2 per unit. For accounting department, their cost, departmental cost divided by number of transactions. So that's 1.5 per transaction. So the materials handling cost variance is computed as follows. So we will use the applied. Okay, so 6,000. Okay, we will use these items right here. Times 22 orders, so 132. Receiving 2.8 times 30,000 units. These are actual orders and actual number of units. Please take note of that. Materials department 2 times actual number of units. Accounting department is 1.15 times actual number of transactions. So the total applied materials handling cost is 309 minus the actual. Okay? Departmental cost of 305. So the over applied materials handling cost is 4,000. So the entries for this is to debit materials 5,500 actual plus our applied materials handling cost. So that's 5,809,000. Credit to accounts payable of 505, and then applied purchasing, receiving materials, and accounting department expenses respectively. These amounts are taken from here. Okay, so those are to account for the materials cost. Okay, for accounting for our materials.